Boom. We're alive, ladies and gentlemen. What now for Bitcoin? Oh no, what's going on with the crypto market? Well, I don't think any of that's really important, technically speaking. Now, one of the fun parts about a good thesis is it should be adaptable. You should be able to take any good investment thesis and kind of take it away from any of the investments you're making, and it should still basically function on its own. For instance, whatever you're interested in studying, researching, the things that you find valuable in life, if you continue down that, you often end up at some type of investment, even if it's just in the process of learning. So today, what I want to go over is, so I guess more sentiment analysis than technical. Although I think sometimes we get caught up in viewing the technical. Really what we're doing is viewing human sentiment, and that's a really important factor to try to understand. So not an easy one per se for anyone that's tried to measure how things feel on a scale of any kind. It's actually quite different or difficult to quantify the value of like a moment, like a breeze, or anyway. So there's a really interesting philosophical conversation around the reason, and at least the relationship of price and value. Right? There's some things in life, like air, is extraordinarily valuable to your day-to-day life, but you pay nothing for it. So the value and price is dislocated, right? They're not necessarily joined to one another. So the things that we find ultimately with a very high price tag are not always that are of the utmost value. If you needed air, you would trade anything for it in that moment. So what does that mean? When we're looking at prices and we're looking at sentiment analysis, what we often are viewing is technical, right? We're viewing the amount of buying and selling that's taking place in any particular market. But overall, we're viewing a sentiment. We're viewing almost the confidence of humans in each other to some degree or another. There's a large degree of trust that goes into making a system like this function the way it has. The fact that a US paper dollar has a backing pretty much only of a government and, let's say, an army, and then more importantly, the people of that particular country or these countries are really kind of what's defined the value and the price of this overarching ability to print capital. So we've been running by this thesis, and here's the S&P 500. And the reason why this has anything to do with Bitcoin is because more than just Bitcoin by itself, although it's an ingenious invention, we're watching human sentiment right now. And it's about the discovery of a few different areas. You know, from the early 1990s here, you have a huge run up in tech. Because I remember growing up in the 1990s, and thinking how cool like a transistor radio was, right? So here I am building a small little radio, picking up, being like, this is amazing, like a ham radio would be so cool. And then we rip into the digital age very quickly, and we have two very succinct peaks in 2008 and 2001. The first was the dot-com crash. The second was the housing crash. Both of these likely due to parts of the evolution of technology. You had areas of the United States that massively developed in terms of the tech world, and this is where decentralization started to become a really fun part, was in these years following after the 2001 and 2008 crisis, because it moved us into a technology that really made everything deflationary, right? So for instance, the fact that we can do this, we can look at charts that update minute to minute, we can talk about things out of like an instantaneous moment of discovery with people around the world. That used to cost a lot of money back in 2001 and 2008. So when we're looking at investments, it's really easy to get caught up in these short time frames, whether we're going up or down. Now, since 2008, we've actually started a moment of only up, and there's a very interesting potential here. Right now, we could go a lot higher, because when we go and we compare what's taking place in the markets, and again, the reason this has anything to do with Bitcoin is because we're watching a function of human sentiment and this confidence of these money layers that we use, like the US dollar, for instance. Okay, so now what we've looked at in the past is using the monetary supply as in comparison with the, let's see, M2 monetary supply. M2V or M2S? There we go, M2S. So we've looked at this before. The orange line represents the amount of printing that the U.S. Federal Reserve has done. And in that, what we see is a very, very succinct relationship between the movement of the market and the cycle of the money printing. because these moments are so extraordinarily deflationary, going from black and white radios are cool to we can anyone, me included, can produce and distribute content at a global scale at the push of a button. This is a really interesting point and dynamic in what technology as a deflationary substance can do. So Bitcoin is an inherently deflationary technology. We've been following it for many years, and its growth cycle from a price point is probably one of the most exciting aspects of it, because it feels like a roller coaster ride watching these huge growth and explosive moments, and then a kind of a settling down, and then a reduction of volatility. You know, the thesis here is that if Bitcoin continues to be able to do its job, which again succinctly thinks it does good, something ridiculous like that. What's interesting here again is we're in a hypothesis still. The hypothesis is that Bitcoin can become a collateral layer for this monetary ecosystem of decentralized capabilities that we're witnessing being built right now. And it's fascinating to see how much of it and what it's capable of, because often we don't yet know. Blockchain into itself, and not just blockchain, but just this idea of decentralization, I think is really important. Because again, decentralization started to take place before Bitcoin ever showed up. Technology was inherently deflationary before Bitcoin ever showed up. So having a technological money show up and be inherently deflationary and decentralize the process is a fantastic thing. But we have to remember to be proponents of decentralization, again, which means that there's multiple choices. There are things like Ethereum, there are ideas like Cardano, and a lot of this, you don't really want to be the guy investing in tape decks necessarily, right? Like a lot of the technology we leapfrogged so quickly in the coming years after the early 1990s that it was like hard to reconcile with, right? You went from like tapes to CDs to DVDs to MP3s to solid state to like extremely quickly connected devices to anything that they would want on the internet in a matter of seconds. That all happened in such a very short order that when we're watching technology grow, they grow very quickly, right? So you can see we witness the birth of something like an avalanche, and it moves from its early stage of $1 to $60 and then drops back down to $10. So we have three very distinct, let's say, moments in price function, right? Now, getting them exactly right, I've never been good at that. You can get pretty close to tops and functioning ideas, but getting it exactly right is pretty much impossible. And even more importantly, on the long term, that's where it gets really difficult. One of the fun things here is that these cycles repeat themselves over and over and over again. Yeah, the markets are not separate from the world and the universe, right? So if there's an asteroid that's coming our way, just as a hypothetical, and it's going to hit us, there's pretty much nothing we could do about it. Everything that we look at today could instantly turn around and change the value and the perception of the price in the blink of an eye. And that's what catastrophe or black swans have done throughout history. All of a sudden, before you know it, the world has changed. And we've seen representations of this, and recently that one of the world's greatest fearful moments that I've ever been a part of, we barely dropped it all in the market. The sentiment actually continues to move because they're printing money, because there's no other choice, because we're dealing with such massively deflationary technology that you really want to just basically keep velocity going. Now, I'm not a proponent of socialism, but this is effectively what we're seeing happen. Now, the massive downside to this is, well, there's so much friction in the old financial system that you don't get a lot out of it. It's basically corrupt to its core. So whatever you do send out through velocity, it still goes to a very small group of people, generally speaking. And it doesn't function the way you would hope. Now, I've seen a lot, the liquidity that they've printed, these trillions of dollars, you can see it when you go out into the world. It's there, functionally there. You can see the overflow. So this trickle-down effect does exist. It doesn't hit Main Street all that much, but you can still notice it. So when they print $9 trillion in the heat of a pandemic here, and the monetary supply jumps up like, what is this, 47, 50, 60% in a very short order. Yes, we are witnessing one of the greatest inflationary moments in history, but we're also battling an extraordinarily powerful moment of deflation as well because of the growth of technology itself. So what's interesting to me is that nothing has changed. For our Bitcoin thesis from pretty much day one, although we've gotten much better at understanding what day one was is, okay, well, we show up, we're here to learn. There's a bunch of really interesting things that are taking place. That's why we like venture capital. There's an infinite amount of room for asymmetric upside because it's always been that way in venture capital. Then day over day, a lot of what I'm doing is just researching, talking to people, going over ideas. Like the general market sentiment is almost unimportant, right? You get your best investments while people are fearful. Yes, you should always have coffers on hand for that moment, however you can choose to do so. But in general, on a day over day basis, I think the fundamental exciting part about this sector is witnessing all the cool stuff that's coming to life. So it's not just about Bitcoin's price. For me, some of these moments when we see these big changes in cycle, yes, well, actually, this is great. If we start to see big closes above the trading range, boom, we're back on our way to $100,000. We'd always kept that thesis that even if we came down to 23, that what we'd end up getting is maybe like a 200-day cycle, very akin to what we saw back in 2011 and 2012. So it's so easy to get the price, let's say, wrong when you're focused on such a short term. But we've never been focused on a short term. I think I think it's kind of fun. It's one of the reasons why I like to do it. I'm very entertained by seeing how close we can get in the study. And where are the big key factors? We are not strong proponents of using things like falling wedges, but here within this trading range, this falling wedge actually proved to be a very powerful indicator within the trading range. And that's what we're always trying to do, is just adjust what holds the most credibility through time. And I don't think there's getting it right. Yes, because I'm not trying to trade these. I'm not trying to buy in here and sell here and buy here and sell here. It's not what I'm doing. It's not what we're doing at all. Just consistent focus and strategy into venture capital. And because of that, the idea of what now, what to do? The price has gone up, it's gone down. Well, nothing has changed in our thesis. And that's the fun part about this idea, is that conceptually speaking, you just go in and you repeat on whatever form of investment you are interested in. Yeah, look, we get some wrong. I mean, that's the fun part. The fun part about venture capital is that you have a failure rate, so you adjust accordingly. What are you willing to lose failing? It's a great question to understand. If you really can grasp risk, the most exciting thing about venture capital, this opportunity of this deflationary process where for now you can invest in, not all Americans, but you could invest in Avalanche as like a random person in Iceland, right? That's a fantastically massive opportunity that you just didn't have in the early 1990s, the early 2000s. You had to be going to the right hangouts in San Bernardino or something to be a part of that venture capital circle. Now it's open. It's are you hanging out on Twitter? Are you chatting with people on Zoom calls? So I think that the research and the decentralization, the deflationary nature of technology has made the opportunities so vast and so wide. So, ladies and gentlemen, whether the price is at a high point or a low point is almost irrelevant. We assume that we've got decades here, and that what we get the opportunity to do is partake in the growth of some of the next very important not just economic, but information layers as well, which are hyper important, like the ability to share information freely. Like Wikipedia used to be amazing. Now it's just a garbage dump of basically paid off interest. And this is a problem we've had with a bunch of the stuff that we've built, is it can very, very easily be co-opted. This provides the opportunity to maybe solve some of that stuff, not just on a monetary layer, but in other layers as well. So I'm deeply fascinated by the conversation around the conceptual aspects of decentralization or deflation, right? Or distributed systems. Because that's the powerful content, I believe. The price is just a day-over-day function of what people are finding more and more valuable, and it's almost irrelevant. I think it's basically irrelevant. Yes, we could prove we've got it right now. I mean, the thesis of Bitcoin functioning as a collateral layer has made it through enough years now. I believe we have a basis of credibility for the rest of the thesis, and it shows by the hundreds of billions of dollars that show up in this sector. So keep that in mind. Regardless of the prices, up or down. I'm ultimately bullish in this entire sector. I don't think you should be divesting. I think it should, even when you should just be more focused on investing into the like maybe you're into art and you want to play around with more NFTs. Maybe you're really into data analytics and research and you want to build things. You should be focused on what you find interesting about this sector alongside investing in, because I think it's a fascinating part to witness this another clear evolution of technology in the way we communicate value. Anyways, whatever. I don't even know why I had the charts open for that one today. It's kind of silly of me, I guess. But thanks for joining us. Hopefully everything went smooth. Just kind of riffing for today. You know, I'm basically getting to a point where, because our interests have changed, pretty much entirely focused into venture capital and finding interesting people doing interesting things. Just it's more entertaining, I guess, as well, right? I guess price over price on a daily basis is very emotional, and it's a great seller, but it's definitely not the most interesting thing. So, you know, the fact that you can play around in this ecosystem, partake in, I get, you know, regulators are always trying to make things like this more difficult, but ultimately, you know, if that's when you see great lawyers show up and other people who are interested in this sector help this space grow. So anyways, I'm not even sure why I left the charts open today. I think the reason was to go through this idea of, okay, you know, on a day-over-day function, the prices are effectively irrelevant if we're doing a good job. What very important is to know the start of the bull market and the end of the bull market. And didn't think that the bull market was over. Thought we're taking maybe the 200 day rest. Maybe we still got that extra 50 to 60 days in there for rest time, or maybe we just shoot back up right now. That would be great too. Either way, the function of that price range in between different areas of risk are almost irrelevant until we know anyways. I think the clear repetitions of what's happened in the past for our bear market cycles is that the easiest way to look at it is everything below a cycle high is an accumulation range. So this idea of buy the dip is technically true as long as you're functioning on a consistent investment strategy you can follow, because then you're ignoring the dip, and that's even better. Because if you were to measure the people that are chasing the dip, like the dip chasers, and just the consistent investors, the consistent investor does just as well and basically doesn't have to try. They just have to find the right products and services to be investing their time, value, and capital with as well. So I think the more and more I've gone into this, the more and more I realize what makes those who have made really, really successful. And again, this is not always the case. Like, if you're a good programmer and developer, there's so much stuff that can be done with data analytics and quick, high-frequency trading. The Jim Simmons ideas there were fantastic. It's definitely possible. My interest, though, is actually, I've realized, is I've distilled it more and more. It's just into the people that are building projects and the cool stuff that they're building, because I can understand that conceptually. And I'm like, yay, something I can make sense of. The price is just a function of whether we were right on that vision, and that's kind of a nice function. So for those of you that were also paying attention and interested, Fever is launching with a bunch of new ambassadors. I think, and again, I'm not hugely interested in soccer. My interest is in the evolution of the tech in the community. So it happens to be soccer or football for Real Fever. So something I don't understand with something I kind of do understand. And they've done amazingly well. And I think that understanding that value niche in the community, like social tokens, I think are going to be a big deal over the next few years. NFTs are obviously fascinating, especially for that community build structure. You know, more than just it being only Bitcoin, I think that one of the really kind of unique providence aspects or novel aspects about this is the way you can empower communities to collaborate with one another. I've always thought that you're going to see a fascinating rebirth of municipal governance because of stuff like this as well. So the next few decades are going to be really interesting. So I'm here as an investor, and I like meeting interesting people trying to change the world. So that's been my favorite part. The price is seems to be just a function of whether we could perceive the conceptual value, and that's what I'm most interested in anyways. So we're probably going to find a way to write more of that into the content. It may not be the most popular, but it's what I find the most interesting. So we'll just go with that. Anyways, I guess that's what today's episode was about. Not too much about price, more about value, and definitely about the depth of the interest. I think a lot of the times it's really easy to get caught up in, like, say, being emotional about the price, because it makes a difference for your life, right? Oh, I can buy whatever vehicle or property I would like. I could travel wherever I would like. I can eat whatever I'd like. Well, okay, that's cool, but what are you going to do? Well, the fun part is, what are you doing? I like to work. I like to make things. I like to communicate with people. So I think that more than the financial aspects of success, which are great, like a scorecard, the real fun is getting right what you would like to do with what you're doing in life. Some people would just like to play, but I like to connect and build and communicate and share ideas with people, and it's a lot of fun, and I'm going to do that no matter how much money I have. So thank you all for joining us on today's episode, which is always just discovery mode. For those of you that didn't know, I no way planned to be an investor when I was younger. Like a bunch of people went for school. Like I'm chatting, a lot of people we chat with, like they went to school for this kind of stuff specifically. They've been doing it for years. They worked at Goldman Sachs, or they've done data analytics. Like, no, I got here to this part of the mountain totally by accident. My interest in venture capital came more from my interest in mathematics and asymmetry than they ever did for making money. So I got lucky to get here. Like, I'm very, very happy to have ended up in a place that's so lucrative by fucking accident, because I got here strictly because of my interest in abstract things, not in my interest in making money. Although, again, happily surprised with the sympathetic response to those things. I'm just having fun, kind of learning and discovering what's possible with all the interesting things that are happening in life. So being flexible with it, like for instance, soccer NFTs, that was a little bit out of our wheelhouse, but I think it's really interesting. So I want to find a way to pivot away from just specific day-over-day price stuff and more into the largely much more interesting, in my opinion, conversations around people building interesting stuff. Anyways, I'm really excited. This is Wednesday morning at 8:39 a.m. here in Costa Rica, so in approximately 20 minutes. I've got one of my favorite Wednesday phone calls every morning at 9 a.m. It's like almost like the bat call or something like this, but for bears. I don't know. What was the next one here? Oh, yes. Well, that's it. I guess that was the only point I wanted to go over today. Just kind of the perception of value versus price. Price is very easily used for excitement and capture, but it's not our main interest. So trying to lean into that. So that'll be fun. Watch for that, how that goes. We'll still do market updates. Maybe it'll be like once Monday and once Wednesday. And then that way we can build more of the conceptual, philosophical aspects of my interest going forward, because much more entertaining for me. That also means for the private bear group, we are bringing on more writers. So shout out to Zubin for his help. We're looking at building some more data and research analytical tools for us as we grow too. Being able to do on-chain data, although I think Glassnode's great, realizing that we can build our own version and focus just on our own investments. It probably is a much smarter, very niche route to the type of data we're interested in collecting and using for the growth of our current thesis, because I feel real confident about this one. So far, it's worked great. So now just trying to button everything up, cross all the T's and dot all the I's, all that fun stuff. Okay, a few thoughts and a few questions. I know videos like this are going to be abstract. We're going to trim the crowd of interest, I'm sure, just by going down this avenue, but that's always an interesting conversation. So let's see. Let's take a look at some of your guys' thoughts. T. Heg says, best way into venture capital projects for U.S. citizens who aren't accredited investors. Great question, T. Heg. Now, the first thing I would suggest is actually listening. More than trying to do, first off, you should try to do next, but one of the first good things to do is to listen. Like to listen to the underlying concept of people like David Hornick, who we had on the show in September of last year, talk about what made them successful. Because all of my mentors really preach an idea of the core of the business being focused around working with other people, helping other people, creating a good community culture, and that really drives the growth of a really successful business. So that's a key point to take into account. Now, venture capital specifically is often about finding interesting people doing interesting things. So one of the unique aspects about this sector is you don't need to get into a private sale. You just need to be patient, effectively, right? Let's take Chainlink for an example, right? Everybody loves Chainlink. And Chainlink was a great idea. Investing in Chainlink was a great idea. Now, I'm not a maximalist here in any way, shape, or form. So I think that investing in Chainlink was a great idea. Now, why do I think that? Well, because it's really interesting technology. Well, I don't actually know that it is either, by the way. I just know that there's people I can trust who could tell me if it's good technology or not and how good. And just as a short frame example here, from March of 2020, basically the start of the pandemic, to the peak out of the high, you had a 2,800% growth. Pretty much day over day. That means from the beginning, and this is why I think finding the beginning of the bull market is so much more important than messing around in the end here. Finding the beginning of the bull market, this is where you start to lean in. Everything before that moment should be consistent buys. That way, even up here, you're actually technically buying, although you're also selling up here too. So here you should execute a small monthly buy, but you should also be executing a sell. But that's a different story. I don't want to make it too complex. So effectively what we look for is the beginning of the market, and we ignore whether it ends or not, because as long as you get in near the beginning, even down here where you are today, let's say from the breakout of May, you're still up 500%, right? So it's a measly 2,000%. You've lost 60%. Yeah, but you're still up 600%. Ladies and gentlemen, the traditional markets would absolutely love to have volatility like this. Oh, and hey, they do now. This is it. This is where it is. But from a venture capital perspective, you could have jumped in Chainlink a long time ago with a very small amount of money. The majority of what you should have been doing was education, only like a few $1,000s, and done really well there, right? So scale that up. Oh, and that's what we're witnessing. We're witnessing the huge scale up of composite operators, people that have access to billions of dollars. They help run up ecosystems and they sell them down and they reaccumulate. Now, sometimes, the difficult part here is that the most important part about an entry is where you get in. So from a venture capital perspective, even if you couldn't get in Chainlink from the ICO because you had to be an accredited investor, let's say that was the case, often by the time we have a market cycle low, the fear has gone over a few layers and you have access again, right? So you may not have had access to Avalanche at 30 cents, but you can get access to it later at $10, and you're still looking at a very similar risk profile, which is the potential for infinite upside and only the downside of what you've invested. So it's sentiment. Sentiment is difficult. I'm definitely not as good at calling the tops, although I learned something about this particular interim top that I will forever pay attention to. Because I'm not super euphoric with money, I have to watch other people and their euphoria with money. At this moment, it was quite clear that there are a lot of euphoric money spenders. And again, that's just not me. So I have to watch other people and witness what they're doing. And then it was very clear. So I think that's a moment that I'll forever recognize. This one, the beginning of the pandemic, was actually much easier to recognize. Forever in the future, it's much easier to recognize peak moments of fear. And in general, like we had talked about with Bitcoin, this is actually a fairly high level moment of fear. We'd seen major capitulation in the miners. There would only have been room for temporary downside between 23 and 19, although Ethereum looks less delicious per se. Bitcoin actually looks like it held up much better than Ethereum. I think, and again, ultimately, it's so easy to be wrong on a price over short time frame point. My main function again here is like 5 to 10 year outlook and 5 to 10 year plays. Something like Link, when Tech Team brought it to us, you could have beat me over the head and I wouldn't have understood. But now what do I understand? Oh yeah, we're investing in technology here. So make those investments. And that starts with learning, educating yourself, and just, being patient, right? So again, if you're not an accredited investor, you can generally be patient and they show up on the open market somehow. It's fascinating. So this whole area is venture capital. Whether you can get in from a private early seed stage as a accredited investor or not, you have that opportunity still. Like you never had that opportunity before. And even though it might be 1 to 2 times higher, these are asymmetric in potential. They also could fail, right? So it's a very clear dialogue. The focus around this is very clear. So I think that and again, you shouldn't be making hundreds of thousands of investments. Like if you're a company that focuses on that type of stuff, yeah, you start to make a lot more. But as an individual, you should be finding the things that interest you the most, that are accessible to you, seem like they have the most value, and then you should be doing that consistently for like 2 to 3 years. That's why you see people that are like Link Marines or Bitcoin maximalists or Litecoin, the Litecoin League. It's because you need a certain level of behavior to at least make it through the roller coaster of a ride of thinking, well, are you right or are you wrong? Because it takes a few cycles. Neo is a great example. Went up super high from ant shares, came collapsing back down, and it's never really recovered. You were better off investing in Avalanche and starting over again. So you don't want to stay too married to any particular investment thesis. You do want to be able to explore, but I think when you find an idea that fits right what you're looking for, whether you're an accredited investor or not, the most unique opportunity is that you're being offered access to that at any point in these early venture layers. Again, even in the 100 million range, it's not a severely high market cap at that point for a company like OpenSea, right? Actually, a shout out to anyways, more venture capital stuff. That's what we're gonna get. So I hope you guys are excited about that. Thanks for joining us today. Gotta get ready for my next call. It was a pleasure. We will speak again soon. Wait, hold on. Let's take a look at a few guys' thoughts. I have debated this. Keep it real, Tio. The fact that you didn't plan to be an investor is why I like you, and I know you were doing your dharma. Yeah, thanks. This is a fascinating turn of events for me. Studied music and psychedelic plants all my life. I'm like, oh wait, hold on. I love this work. This is really cool. Anyways, it's a total difference. Not something I would have expected. Eighth Day Health says, opinion. In the future, when we take Bitcoin profits from top of cycles, where's our money best to go to fiat continues to be unstable? I focus fiat on investing in my own business interests. I think everybody should have a job that builds something positive for their community as well. I don't know what that is for everyone. I think it probably varies in function and the range and style that you are interested in doing that. But the cycle threshold tops, when I see nice movements in the portfolio, I take around 3 to 5 years of operating capital to make sure that I could fail miserably and still succeed. That's a heads I win, tails I win. Okay, great. Again, I started as an entrepreneur and realized that we'd have big business cycle ups and times where we had to rebuild and try new things, and things are always evolving. So you're constantly trying to have new iterations of a hypothesis of, well, what's a successful way to provide value for people? That's a really interesting dialogue and question. I think the reason why I focus on business expenditures for the portfolio exchange is because that's the easiest way then to not worry about the portfolio when it's going through all these fluctuations. It gives me the opportunity then to also just keep adding to my portfolio during that process, knowing that I've got the next X amount of time covered. Now, I'm fairly conservative in my approach. Some people, there's that kid that went all in on Dogecoin. I would never do that. Now, again, I still thought a few $1,000s in Dogecoin in August was a great idea. Hey, we were right, but I would have never put $100,000 in Dogecoin. But congrats! I mean, you got lucky there. And with a fairly high degree of well, as long as he exited. I don't think he actually exited either, so that's a different conversation. But I think that the point of there too is to be exploratory, right? There's nothing wrong with having $1,000 in Dogecoin because you thought it was hilarious. That's never a bad idea. Let's remember, people like Pokemon cards, people like dragons, people collect Legos, right? Whether it's you're into sports cars or baseball cards, whatever you're interested in, or yachts, I don't care, art pieces, fucking Basquiat. Anyways, focus on business, I think, is an important way to go. That's why I think if you function by that layer, managing an investment portfolio is easier. Now, for some people, you end up having a high degree of interest in both. Like what I realized is we were good at was researching, finding early startup companies, investing in those, and then basically doing yoga for the rest of the time. And enjoying it. So I don't know. Anyways, it works out well. We'll see you guys in the next episode. I guess again today's rant was that we're going to be shifting focus more towards our research into the wild ideas that are being built right now, and trying to follow them a bit more closely, including the data and the research that goes into that, and all the exciting things that comes with the future. So thank you guys for joining us. Thumbs up if you like this content. I just for fun, I have no idea where we're going every time we start these conversations. So thanks for joining along. It's always a discovery and adventure for myself as well. So I appreciate that. Otherwise I think I'd get bored. So I'm glad I don't get bored. Otherwise, just always doing the same thing over and over and over again. We'll shift gears. We'll try something. I think that I'm definitely more. It's been more successful for us, and it's been much more entertaining and interesting because of the people we get to meet too. So thank you all. We'll see you on the next episode. Bye.